Hey everyone, and welcome to Earnings Cheat Sheet for Friday, November 14th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So, Ed, what do you have for us today?
Well, I want to take a look at Futu Holdings, Walmart, and I guess we can take a look at Nvidia.
Yeah, I guess we've never really heard much from them, but we can definitely take a look. But let's start with Futu Holdings, which is scheduled to announce Q3 earnings on Tuesday, November 18th. Earnings for the Chinese fintech are projected to jump 96% to 251 per share, and revenue is seen rising 62% to $715.1 million. And here's why we're watching Futu Holdings. We'll be looking at brokerage customer growth and trading. So, Ed, Futu Holdings was a recent IBD 50 growth stocks to watch pick amid accelerating earnings and a powerful year to date rally. And Futu earnings have grown by an average of 101% over the past 3 quarters. But why is Futu on your radar?
Well, yeah, I mean, it has really great fundamentals and it has great technicals, or at least really good technicals. Strong growth brokerages have been strong around the world, obviously, and Futu definitely is a way for a lot of to be playing things. It's a big brokerage in China. Yeah, I mean, really stellar growth. Want to see if that user growth and the size of the accounts, all those kind of metrics beyond obviously the headline news there, but definitely an interesting stock to be looking at.
All right, Ed. Well, let's take a look at the chart to see what the story is there. And when we look at Futu, we see it got turned away at this 200 level. It bounced off the 50-day line, but right now looking like it's trying to find support here at the 21-day. So, what would you like to see set up ahead of earnings next week?
Yeah, I mean, I mean, look, there is the 200 level, which is, just above the buy point of 199. So I say 200 or that area is where the traditional buy point would be. If it could get rebound from here and get above, say the high this day or the last couple of days, I think that would probably provide an early entry on earnings. I would really caution people that even on earnings, now it doesn't look so big back here, but if you go back just a few, it makes big moves on earnings. The last time it had earnings, it fell on earnings, then reversed higher. Now it was sort of out of position. And the prior time, it gapped up and then reversed lower. So this is one not only that can make big moves, but can make big, swings on earnings. And so it's not. So I would just be just even then, even when earnings come out, it may look good, and you can play it. But definitely when you want to wait a few minutes, and even then, you just have to watch and see. But that's probably how I would play it.
And in terms of fundamentals, Ed, we're on the weekly chart, but I mean, this has great EPS rating, pretty solid accumulation distribution rating. The RS line, while it's been trending lower over the last month or so, it is in an uptrend here. So, anything about Futu that's jumping out to you?
Well, I like you can see that it's a prior uptrend after a base. There was this base and it was cleared around 120 and it was messy. And you can see there was a lot of up and downs there, but that's nice to see. And even that was sort of with a prior uptrend. Again, very messy, very up and down. It's made a nice move since the middle of 2022, but boy, it's been a up and down road. A lot of China stocks are showing some interesting moves, but that is a volatile sector. The overall U.S. markets are volatile. But yeah, it's definitely a lot of strength in here. The growth is supposed to slow down, so we'll see about that. Not supposed to so much this quarter, but going forward. So I think that would be interesting to see that. And one other thing is that the bounce we had after that sell off through the 10-week line about 4 or 5 weeks ago. Okay, some of that came on heavy volume. We haven't really bounced back in heavy volume. I mean, the comeback hasn't been on super impressive stuff, and that's one reason why the up down volume is zero point 0.9 as opposed to something more solid. You want to see over one and well above one if, and ideally.
All right. Well, let's move on and take a look at Walmart, which will report Q3 earnings on Thursday, November 20th. Earnings for the retail giant are expected to climb 4% to 60 cents per share, and revenue is projected to rise 5% to $177.45 billion. And here's why we're watching Walmart. We'll be looking for comments about consumers. We'll also want details on e commerce growth and the Chat GPT shopping partnership. And Ed, investors will be looking for how Walmart is managing the impact of tariffs and inflation on its cost and consumer prices. A TD Cowen analyst raised Walmart's price target ahead of earnings, citing growing income from advertising and memberships, which earn higher profits. That same analyst noted that Walmart is in a strong position, supported by steady sales, a growing online business, and new income streams that can lift future profits. So, what are your thoughts on Walmart?
Yeah, I mean, Walmart doesn't have this huge growth anymore. I mean, on overall, but it still can be a steady performer. We're looking to say, I mean, if the economy is a little shaky, there's this and that. I mean, people often trade down, so the discounters often outperform. Maybe at least on a relative basis. It doesn't mean they have do great on an absolute basis. Their e-commerce growth is pretty strong. That they just announced that Chat GBT pack, so that will be interesting to see if they how see how that's going. And I don't know if it's really launched or if it's something that they plan to launch. It would be good to hear more about that. And yeah, I mean, I think the memberships at Walmart Plus, that's another thing. Not, I don't think people compare it to Amazon Prime, but it's still the shopping perks and other things that probably drives business and it's probably profitability, sort of that a little bit like the Costco model. Obviously, they have Sam's Club, which is the Costco model. So just want to see how all of those things play out.
All right, Ed. Well, looking at the chart here, we can see shares have been mostly moving sideways, but have been putting in higher highs and higher lows for the most part. On October 31st, shares undercut the 50-day line, and it's taken almost 2 weeks to try to get back up to that level. But we see the 21 and 50-day kind of conjoined here. So tell me your thoughts on the technical action here and what you're looking at in terms of earnings.
Yeah, and you can see that real gap up about a month ago. That was on that Chat GBT news. So that really did spark things. Absolutely right about it's taken its time. It's been pushing up, but it can't get above the 50-day line. It needs to do that. I think if it went decisively above the 50-day line, I suppose you could use 104 or 106, or there's a trend line. There's all sorts of things you could get in there off of earnings, but I wouldn't do anything in there. So there are possible buying opportunities there if it can make a solid move through earnings. Again, this is one that sometimes makes big moves, at least in the pre-market, and then it can erase those gains or losses or reverse. It doesn't necessarily make massive moves during the day, kind of thing, but definitely in the pre-market can swing around. So possible buying opportunity. Again, it would be something like, it's more of a defensive. If the market's not looking great, this might be something, but there's otherwise, it hasn't really led for the past year or so. I mean, it did have a stretch of outperformance, but the relative strength line has lagged for the past 6 months or so.
And, in terms of IBD ratings, less than solid numbers there, but anything else jumping out to you in terms of the fundamentals?
Yeah, I mean, yeah, the EPS is just okay. I mean, that the earnings per share, it's growing a little bit, and that's what you're getting with a company like this, and it's actually pretty highly valued. I mean, when you think about it, for a company that's having sort of single digit or low double digit growth, and probably doesn't have prospects for really picking that up. So that was just things to consider. That how much can it go?
All right. Well, let's go ahead and dive in to Nvidia, which is scheduled to report on Wednesday, November 19th. The AI Titan is expected to see Q3 earnings up 54% to 125 per share, and revenue is expected to rise 56% to $46.74 billion. And here's why we're watching Nvidia. The focus will be on supply constraints. Jensen Huang has already talked about the need for Taiwan Semi to add capacity, but we'll also be looking for details on other supply chain issues as well. But Ed, demand is looking strong for now. And Ed, the AI chip designer recently made history by becoming the first company to reach a $5 trillion market cap. But shares had a little bit of a rough time this week after SoftBank sold its stake in the chip maker for about 6 billion in October. The Wall Street Journal reporting on that this week. So again, here at Nvidia can move the market. So what are you looking at ahead of earnings?
Yeah, I mean, Jensen Huang has been talking, but like was pretty bullish recently. So we know, yeah, we know the demand is going to be strong. We know that earnings are going to be strong. It could be that they disappoint, they don't meet expectations, or the whisper numbers. I assume they'll probably beat expectations, but there's always the whisper number. How much better? And especially on guidance, will they guide up by a lot? But yeah, but part of that guidance is the supply constraints. Can they make enough Blackwells, Blackwell chips, and so on? And just other things, what they have to pay about commentary, because it's like, well, are it's hard to believe that Jensen Huang wouldn't be bullish, but you see like a lot of other AI things, like a lot of the AI computing plays, like Oracle or Iron or Nebius, they're selling off lately. So again, that may be more of a reflection of those stocks need to take a break rather than their businesses being poor. But these are companies that are buying a ton of Nvidia chips. If this it's just something to note. I mean, at that kind of thing. So yeah, it's going to be more like, can they boost up supply? It seems like the longer term commentary, but it's hard to know how seriously you can take that, because how after a couple quarters out, I mean, how much, but presumably they'll be bullish. It's just a matter of, can it meet the high expectations that the market is setting for it.
And in terms of the chart action here, Ed, shares recently bounced from support on the 50-day line on November 7th. Prior to that, we saw a breakout above this 184.47 level. But Ed, shares testing that 50-day line again. So talk to me here about the NVIDIA chart and what you're seeing.
Yeah, it's trying to hold that the 50-day line and this 184.48 buy point, which I suppose you could still be using. Uh, it ran up a couple of weeks ago, and there's some bullish news, I'm sure, here and there. I can't remember all the news. There's so many AI headlines, but it's gave that up pretty quickly. It bounced some, but it's given that up again, which is a lot of things. A lot of other giant companies are falling through their 50-day lines on this day, but this is critical. I mean, it's like it's got to hold here. I think you got to wait until earnings come out unless you're doing an option play. And I assume that the options are going to be pretty expensive because this could move a lot. I mean, that's all. This may end up having a great buying opportunity. Maybe if it gets above the highs from the last few days, or something, 200 or a little below that, you could imagine if it bounces off earnings. But this is also one that sometimes will gap up on earnings and then has faded back, later on in the day. So it's just one to be watching for. But man, this is just so important, how Nvidia's results are perceived by the market is just going to be so huge for the market. That you just got to think about the 10, well over 10 trillion, 15 trillion, 20 trillion dollars in stocks that will have a major move perhaps on what Nvidia does beyond its Nvidia itself.
That AI theme so important to the current market rally, Ed. And just looking at the weekly chart, again, we can kind of see that Nvidia has been struggling to sustain that upward momentum. But talk to me in terms of the fundamentals or anything else that's standing out to you on the weekly chart.
Yeah, the fundamentals are just tremendous. I mean, yeah, the growth rates are falling, but the numbers are going to huge comparisons, and comparisons on comparisons, a year on year kind of thing. I mean, we look from a couple of years ago. I mean, the amount of sales that just the growth has been tremendous. It's supposed to basically hold the growth rates, I think, for this current quarter versus the last quarter. I mean, which is impressive. Probably because I think the Blackwell is ramping up a little better. There's a big increase quarter to quarter in sales. I mean, there's not much of a change between April and July quarters, but a big one this time in terms of the absolute number of sales. So that's a reflection of that, and it's supposed to ramp up a lot. We're seeing it's supposed to be 50% sales growth for the next several quarters. I mean, really strong growth. So you really can't say anything about the fundamentals. And remember, I said Walmart has a pretty high PE ratios. I think their forward PE is 39. Nvidia's is 40. I mean, and if it beats by anything, so which one? That's so that tells you something. It's not crazy expensive despite its massive run because the earnings have been even more impressive over the last 3 years.
All right, Ed. Well, those were some of the big names on our radar, but there's more to look at. So let's take a look at some more retailers, starting with Home Depot, Ed. That's scheduled to report on November 18th. And this one has been in a downtrend since September. But thoughts here on what earnings could signify for consumers in the overall economy?
Yeah, housing hasn't been doing particularly well, and there's probably tariffs that get an impact on, with lumber and some other things. This is not, yeah, I want to see this be a sign of consumer spending, but also about remodeling, about housing. And I don't know if people really want to take on big projects right now, and that's a question here. But it needs to do a lot. It needs a lot of repair work. This has been struggling. It's probably not something that people want to be looking to buy right now, but it will be an important stock.
All right, how about a look at TJX earnings there on November 19th? This one broke above a 146.46 buy point on October 15th. It drifted down to the 50-day line, but has since moved higher, Ed. So, again, what are you looking at here? And potentially, what could this reveal about the state of consumers?
Yeah, I mean, it could be they could do well, and the consumer isn't necessarily doing well. So it's always a mixed bag. But their insight will be important here. This one, well, Walmart has pulled back. TGX isn't. Yeah, it's basically at highs, and the relative strength line is basically at highs. That's really improved over the past few days and weeks. So uh, this one could be viable on earnings. We'll see. But yeah, but we'll definitely want to hear about what this means for consumers as well.
We can have a quick look at Ross Stores as well, earnings on November 20th. And again, this one has been moving higher since testing this 50-day line back here on October 10th. So, thoughts here?
Yeah, the fundamentals aren't as good, and I don't think this has the prior uptrend that TGX had. I mean, it's had been an uptrend recently, but it's been more was going sideways over the last longer period, but still positive to see this. And again, discounters doing well. Yeah, this has gone sideways for quite a while, and the relative strength line has been generally weak until the last a few months. It's picked up a little bit, so TGX has been doing better.
All right, how about a look at cybersecurity play Palo Alto Networks? Earnings there on November 19th. And I'll switch back to the daily here. This one below the 50-day line on this ugly downside reversal day today, Ed. But again, reversing into this buy zone here. But what are your thoughts with the technical action?
Yeah, this doesn't seem like the leader. Now, the leadership can swing back and forth. This is doing okay. It's certainly not wrong and bad action the last couple of days, but it's still technically in a buy zone. I think I'd be curious about We'll I want to hear more about what it means, uh, what it means for other cybersecurity firms that maybe are leading a little bit more, like CrowdStrike or Cloudflare, Zscaler.
All right. How about we take a look at trip.com? Earnings there due on November 18th. This one trending higher after retaking the 50-day line on November 10th.
This one technically sort of, maybe be an early entry now if it weren't for earnings. Uh, this one's been doing okay, but it also has big swings. Um, it's just a little bit, you know, i- it's setting up okay, but it's like the numbers haven't been tremendous, a little bit spotty. But I think the peer of that ATAT is the better play.
And how about a look at Viking Holdings, the cruise line company due on November 19th? This one trading just below the 50-day line at that 60 level.
Yeah, this is interesting because its peers are really not doing well at all, and this one isn't doing great. But you can imagine, oh, it's viable with a strong move. And I think I could see some people looking at this as almost a shorting opportunity. On the flip side, if it doesn't perform well, if it gets rejected here, this is a little bit more a higher end on the consumer spending kind of thing. But I think it'll be interesting there. It'll be interesting to see how this one reacts because it's at a key point.
All right. How about a look at China EV maker XPeng? Earnings there due on November 17th, Ed. And this one had a big move last week, charged up to highs, but is pulling back right now. So, thoughts here on XPeng?
Yeah, it's a little. maybe technically be in range, but we'll have to see how earnings go. But the buy point, there was a big cup with handle at like 24.96. I mean, it's pretty wide and loose, but it blasted out of there. Their growth is tremendous. They're getting into humanoid robots. I'm not sure what they'll be doing, but it's pretty good. But they have flying cars. But one of the hottest EV makers right now. I mean, really, really strong growth, and you can see that down there. So the earnings, they should be strong. We know what the sales were. We'll also see guidance, what they'll have the guidance for Q4 deliveries. They've already turned in October, but presumably we'll get guidance. So yeah, so see, this is one of the best names. It's supposed to turn profitable pretty soon. I think might even turn profitable next quarter, but it's definitely supposed to turn profitable next year. So really, that is that can it turn the corner there and turn profitable?
And talk about this because it seems like there's a lot of volatile swings here. So again, how if you're interested in this theme and you have conviction, what are you looking at then in terms of entries?
Yeah, the volatility makes it really hard because this one could sell off 30% in a heartbeat, just, like in a few weeks or a couple of weeks, and that wouldn't be shocking at all. So I would be looking for early entry, maybe bounces off the 10-week line, 50-day line. It feels extended here, but it could go on a run, but it just doesn't feel like a market where you want to be stretching out. Obviously, if the China markets sell off, that will knock it. And yeah, sentiment it does go up and down a lot. I would be looking for as close to buy points or looking for early entries, pullbacks more than well into the buy zone.
All right. How about another China name with Xiaomi? Earnings for the electronics company due on November 18th. Ed, and this one in a downtrend here and trading well below the key moving averages. But why is this one on your radar?
Yeah, I mean, this stock is off the radar, but the company, this is a huge smartphone maker, and it is one of the hottest EV makers as well. That's contributing a lot to growth. I don't know if it's not on earnings price so much. It's probably losing money, but both Xpeng and Xiaomi have passed up Tesla in terms of China sales. So, and they are both competing against Tesla in that market. So this is important, especially this one for Tesla, because its two EVs compete head to head with Tesla's vehicles. I mean, this one, so what it has to say about growth in general, but also about production capacity, because that's been a constraint for them, will be important for the EV market and Tesla in particular, but this one isn't really viable right now.
All right. Well, how about Baidu due on November 18th here, Ed? And I'll switch back to the daily. This one broke out of this long consolidation, hit a high of 149.51, but it has since pulled back and is now trading below the 50-day line.
Yeah, well, the market's not looking too good right now, and you're seeing that with a lot of stocks on this particular day. So if it gets above this week's high after earnings, I mean, maybe. The earnings have not been good at all. But there is hope with AI. I think they announced some AI chip news the last couple of days. I don't know if that was poorly received or it's just the market, so that'll be interesting. They are a big self-driving player and pretty cheap too. They claim that their cars are very cheap, so that's expanding more in China, I think in other countries as well. So those are things that it's really doing well, but it's very volatile. That's clear.
And how about PDD Holdings due on November 21st, Ed, holding at the 21-day line?
Yeah, you can see this is a stock that likes to break hard. When it breaks hard. I mean, it's sort of pausing. It's been trading relatively tightly. I guess I'd like to see it on a weekly, just see how this one is going. I mean, this is e-commerce, and e-commerce is doing okay, but it's like some of the other names are like, well, they're because they're AI plays, and that's not really PDD. So I mean, it's trading tightly here. I can see why somebody would be interested in buying this if it makes a move off of earnings, but it really has a lot of volatility, and the numbers haven't been great lately.
All right, Ed, how about a look at Elbit Systems? Earnings for the Israeli defense company due on November 18th. I'll switch back to the daily here. This one trading below the 50-day and looks like it's trying to hold support at the 21-day line.
Yeah, it'll be interesting to see how the not the end, but the relative calm between Israel and Hamas. I mean, on the one hand, that may mean less demand in Israel, but it also could ease pressure to see bans on Israeli military sales to other countries like Europe. So it'll be interesting to see what their numbers are and their guidance is. I don't know if they'll say anything specifically about the things I just said, but I think that's in the backdrop. This has done pretty well, but it needs to get above the 50-day line. That could provide perhaps a buying opportunity on earnings.
All right. How about we wrap with a look at Viva Systems earnings there on November 20th? And another one, Ed, here looking for support at the 21-day line.
Yeah, this has sort of gone sideways for a while, and sometimes that looks bad. Right now, going sideways doesn't look so bad. It gapped up on earnings a couple times ago, then it fell on the last quarter of earnings. We'll see. It gets above the 300 level. I think that would be probably actionable. Like get above those highs. I mean, there's probably another base now at 310 or so, but it's all sort of one long range. I mean, it's all basically a range for the last 6 months. It's not, if you look on a weekly, it hasn't made massive growth, I mean, in terms of the stock performance for quite a while. That those days have, it's sort of slowly gone up, but not really outperforming the market. Could it go on another run? Sure, especially if you see this as another like of life sciences, if you think, because that sort of competes in that market. If you see that area doing well, maybe Vive is going to get a pickup, but it hasn't been a real outperformer for a while.
All right, Ed. Well, thank you so much for your insights today. And that wraps it up for this episode of Earnings Cheat Sheet. If you want even more market analysis, be sure to tune in to Stock Market Today. That goes live after the closing bell. Thank you so much for watching, and we'll see you all next week.